Great and beautiful morning, afternoon, and evening to you all, wherever you are joining me at this hour. Welcome to 293 edition of Investdata Trading Academy live with Ambrose. Welcome to another new trading week. Yes, this is the first trading week for the second full week for the month of July. And I will tell you that the market across the globe is still mixed, but good now. So kudos to our market here, NGS and African market still remain a bit strong, despite that they are looking mixed this morning. But the previous week we saw that most of the African market closed in the green, and for matured economy and the matured market, we are seeing that mixed trend as different factors are responsible for the movement and the volatility we are seeing there. But the good news is that most markets in that domain too, in those matured economy, are also reaching out, looking at what the half-year result of most companies that will look like. But this hour as we speak, the US market has opened the week on the southward direction as a result of investors looking forward to see the consumer price index for the month of June. And this is what is kind of playing out there. And don't forget that the fear of rate hike has also not helped the market, despite the earnings that are coming from the banks are not are not looking too bad, and they are looking forward to see more earnings to come from these big banks in that especially in US. And these are the things that is playing out in that market. We saw the mixed trend in US market last week, but now we're seeing that this hour, as far as an inflation and the state of earnings from these large companies, okay, this week we're shaping where the market will be going more in that direction. But it's a kind of a kind of a just in a sad note that is opening lower. But the market can open low, and before the end of the day there will be a turnaround, especially as all eyes are on this financials. And don't forget in that domain, we have seen that during the quarter under review, we saw kind of nightmare concerning bank issue. All these are also continued as until they see these numbers from this bank to know the state of the banks in that domain. Most of the Western banks, we have seen their performance because of a different problem here and there have been missed. That was from Q1. But when the nightmare and the banking no fear or warning started coming up because of issue of rate has affected some banks due to the nature and all the sector of the banks and kind of a niche for the banks has affected those ones. And we think that these are why all eyes on this bank result, not only the big names, they are looking to see it. And don't forget also that the non-payroll that were really recently was also a missed job data there that also tells you that investors are still interpreting impact of, because this tell us the real state of the US economy. But it's good that we are seeing that the economy is looking better compared to the previous quarter before this. That means if we are seeing this improvement gradually in US, why that of China? China, these are the two biggest economy in the world. China is still struggling, even when they have kind of cut rate, and at the same time kind of give incentive to boost economic activities. The recovery is still very slow. And I said it last time that the manufacturing sector and service sector are still struggling, and other sectors are still negative. But we see that the improvement in this economy was to determine largely how the economy will run. The high interest rate that is not helping other West Africa, despite China and and Japan have kind of left their rate. Why China cut rate, why that of Japan is negative. But I see that this mistrend has continued in this mature economy, and that's also what is happening in Russia and Ukraine is not helping matter. You can see that gradually the war there is trying to escalate into another thing. But I believe that as most peace talk are going on now, let's see how it's going to kind of bring peace to that region. But as the way things are going, I'm telling you that the way they are handling it, you can't say that yes, tomorrow they will stop. But I believe that hopefully the two parties are not benefiting from it, no matter what it is. Even others are benefiting from it, but their people are dying and all those stuff. I believe that with time they will all come to senses, and they come to their senses and put peace to reign in that, so that global economy also breathe out. But I believe these are the things that will that will shape the market for this week. I believe that on the end of the day, we'll see where the global economy is going. But I tell you, the indication from Fed that they're likely to also further increase rates. This is what I tell you that all eyes on, because the next policy meeting They want to see what what will come up later this month and the end of just like back down home here. Our eyes are also an MPC meeting that's coming later this month again because we have seen our inflation figure. We have seen the last month figure. The figure that was month of May. That's already about around the around the 22.41. We're looking forward to see what June like. I believe in this month of July, June will reflect the actual reform we're seeing in the economy because that you kick off in this June. We want to see how fuel price in the month of these are the things that we're also going to look as we are going to our own MPC meeting that is coming. How the inflation of exchange rate has also going to impact on inflation and all those stuff. These are the things that the reform we expect to see in the monetary policy and the outcome of that decision on how to tail this inflation. And also, if you want to attract fund, you want to expand the economy, the choice of attracting foreign fund or the choice of making the economy more conducive to expand so that good real growth to come. I think it is a choice. The committee will be making here in Nigeria. On the 22nd or 23rd of July for the MPC meeting. All eyes are on that MPC meeting. But for the mature economy, I will tell you they are also in that direction, looking at what is likely to come out from their inflation as inflation data is all looking at, and also banking earnings are also expected to come out this month of this week and next week again, this month of July. These are the things that also is expected to shape the market there as the ball starts rolling for Q2 number. Start seeing what is starting for the second quarter earnings start coming to change the face of the market. Like I told you, if the consumer price index or the month of June inflation also slow down, as expected as forecast, if that happens, it's also going to see if the rate hike for from Fed is going to be, are they going back to the 25 basic points or go back to the world. These are the things we'll be looking at to see, and that is why this morning the market is a bit dull in that domain. But also I tell you that European market is not left out at this point because the pressure from China, deflation pressure also is also telling on all those countries that either import or export what to China. Like I told you earlier that China, economy is still struggling despite that we're seeing a recovery that is too slow, and that's why the stimulus, the measure they put in, cut interest rate in that domain, still the recovery is still go. But was also saying that this new technology that's coming, the life of all these big companies, this fear of trade war again between China and the US. I think they're trying to also to make sure that this have handle amicably between the two leading countries in terms of economic activity. If that is done, might not see much on that. I don't like we saw during the time of Trump in office. Probably that one they handle it well, it's also going to be a good thing. Oil price, just drop again as a result of this the China demand concern. That's why you see oil price going down again to around the 77, 17.81 dollar after the motor got 78 already. The fear of and also these are the things shaping the market as we speak in the mature economy. You don't need to look away from them because it has also have an influence, in what is happening in our market here. Because I tell you, as banks in this mature economy are shaking, and we are seeing that our bank has remain relatively resilient in terms of performance, and the numbers that are coming from these banks are not looking bad. And in terms of capital adequacy and all those who are seeing our bank are stable, from the last statement or report we had from the CBN until we hear from the acting governor and the team. But I believe that our banking sector is really stable, and that also make the sector to remain active as we speak now down here. And also because also the reforms we are seeing in this new administration of the Tinubu government, we are seeing that the banks are benefiting more from inflation exchange rate, also trading of other instruments in the market. At the same time, the impact of the rate hike also from the month of May last year. You can see that even more than a year now, they also have the work. But also don't forget that last year we saw really improved numbers from this banking sector, but because of what happened in Ghana, but most of them were able to navigate and able to take factor those in, and they able to manage it very well. I believe that if that event will happen this year with what we've seen in the economy, I think the banking sector expect to post a better number. Don't forget that they have all gone online transaction, e-banking and all those stuff, and that's also a plus for the bank. For me, it's a good one that we look away of the bank, as we speak, so that at the end of the day, we as a investor will know why we are in this company. It's very, very important that we note all this, so that you will not be going up and down in your decision, because you see what you are buying. You also know that there is value in this bank. And if you look at the banks, PE ratio and the bank earnings, but most of our banks are still undervalued, even at this current price they are going. Because if you look at the PE ratio that is below 15, that they are more attractive. And not saying that because we believe that their earning power is increasing. It's very, very key to know what am I buying, because as prices are going up, I will tell you there are some industry individual stocks where their earning yields, dividend yields, sorry, will also be low, and even earning yields because of the price. But for those companies that has good earning capacity to to grow, and also to to kind of move forward, I believe that that is where we're looking at. And we have seen that the banks with their even recent moves of of holding companies, say that the banks are going beyond just banking activities alone. I believe that this also will be a plus for that industry. I'm not surprised seeing volume coming out from that. I'm not surprised seeing a major position taking that dealings all in that sector. It's for a purpose, because value is being reviewed, and they are seeing it that this value, this intrinsic value of these banks are now coming up, and markets are appreciating it. And don't forget that when liquidity also is in the market, both the good and ugly will go up. But for the banking sector, being the most consistent dividend payment paying sector in the market, I believe that as their earnings are coming up again, that also be a plus to support what they are paying out at the end of the day. That's why this rush we are seeing for banking stock, I'm not surprised, because it's expected that the banking sector has all it takes to reward their shareholders, which they've done before now. With a better number, that would also be kind of indication that investors should also expect better earnings from there. These are the whole things I believe that we should just share this morning, so that at the end of the day, we are not panicking out of the market. Yes, we want to come back to our local market in the NGS. I told you in Europe also the same trend is of stocks are open also on the lower direction. They all edge lower also in Europe. That Asia market is not left behind. All eyes are what on economic data that are coming from these different environments, especially the the inflation figure, and also the purchasing manager index, which is the that measure activities of different domains in terms of their manufacturing sector or the private sector activities, even service sector, all are measured. This tell you that is also what is shaping the market at this hour. But like I said earlier, there's no cause for alarm. We're seeing that all these are having a impact on the market. For that, we expect that the market also look up in the due time, especially if the earnings we are expecting down here in our environment, if the earnings beat expectation, I believe that it will be a plus for investors to kind of appreciate and also assess the kind of stock they are investing. And that's why all eyes are still on this earnings as to speak, because that will give us a clear direction where the market is going, and at the same time where the economy is going. Because you know that once the earnings come, give us an insight how the Q2 GDP is going to look like. We are seeing activity, but these numbers will give us an insight. But that's why I don't believe we're looking at this number, because it has the way of telling you what has happened and what is likely to also to happen, so that it will guide investors in taking the real decision when it comes to what their investment for solo and stock that they should go, and the one they also dispose at this hour. It's very, very key that you pay attention on all this, so that you know what to do as a investor when it comes to what your portfolio. Like I just said now, we want to look at our local market to see how the market is doing, and what is the the stocks doing, and the index, that it will guide us to know exactly what we also do at this particular time that the market is live, and to see what adjustment you can make, and which stock that you should position, and which stock that you should also go away with. But I'll tell you, like if you look at this chart that is displayed now, it's pointing us to something that market is making a higher high. You can see that the chart pattern has changed. I want to bring this back to what a monthly chart, when it comes to chart, but let's look at what the market is doing. This morning, I'll tell you that the market has gained up to 1,562.153. That is 2.5% up. I tell you, this is also kind of a good a day gain so far in the midday. Don't forget that in the first day, on the 29th of May, we recorded about 5.23. But I tell you, this is a good one for a day. I was seeing also, and the market is just still on we're just at the midday trading afternoon traders coming in. But I believe that at the end of the day, this might likely end at 3 points or more than. But the way it's a good start for this morning that we saw this kind of gain in the market. No, market is trading at 64,592.94. That's for the index, up by 2.5% as we speak. And we have 61 gainers in the market. So we're having a positive market breadth of 61 gainers and what and 11 losers. I see that buyers are in charge of the market as we speak, and it tells you that the momentum or the force, the orbit in the market is still very strong, because we are seeing that high cap stocks, low cap stock, medium cap stock, nearly across the sector are being represented on the gainer chart. And I tell you, this is a signal that market is going somewhere. Like I said it in the class yesterday, that this week of this week is one week that the market likely to surpass what we saw in 2008, and already we are close to 64,000. Why? Because the market hit 65,800 and something before it pulled back. But now already, today is Monday. I'll tell you, before they expect what we see when we see the earnings that are coming. At the same time, we start seeing the economic managers list. Those are going to help the government to manage the economy and everything. These are going to be another momentum that will add to the market. And I'll tell you that the foreign investors are not sleeping. They are seeing value. I told you that because most of their banks and most of their the country they are seeing that emerging market is having more potential for them to double what they have. For that, they are coming back here, even though the risk is high. Knowing that coming back to Nigeria with this unified exchange rate, there's a lot of things that become easier for them to come in and go out. I think that would be a plus for us, and that is why I said it in the class, even the master class and the one we did yesterday, that investors in Nigeria should change what their strategy, even traders, so that you know exactly what to do at the right time. Don't apply the strategy you use when the market were fully dominated by what local investor. I was a general investor here who tried to help us to keep the market up from 2020 till now, before starting back, coming back of the foreign investor. They are coming back gradually, and the more they come, because the exchange rate has made our stocks cheaper. I think that will go, because any store that we call high cap store that are selling around 1,000 and above, they are still penny stock before the foreign cost of their exchange rate. But I tell you, the banking sector remain attractive for them, because this is the sector that is more regulated in anywhere in the world. Whether people is over-regulated because of regulation in the banking sector, I tell you, many foreign investors anywhere want to look at it, and because of also the marketability of the business in that of stocks and the volume they have, that is why attention is shifting to the banking sector. And don't forget that this banking sector is also that what brought about this bull run in early May, before on the 29th of May, when the president make a statement that turned also that trigger activities in the oil sector. For this sector, all I wish that is still what sentiment and the policy part. We have not seen also the number that will come from Q2 to tell us what is the fundamental, because this policy statement, from fiscal policy statement, monetary policy statement, inflation, interest rate, they all have impact on what? On the financials of any company anywhere in the world. That means this statement, these factors, want to see how it's going to influence our own financials here, so that investor will know what to do right. And that is why I said Q2 number or half year number, need to call it, is very important for us to to look the way, to guide us to know what to do right when it comes to what investment now that market is in this direction. Yes, we want to start with the top 5 losers. If you look at the loser chart, we are seeing from Adeco, Ikeja Hotel, Champion Brewery, Wapik Insurance, which is the correlation, and UCAP. And this makes UCAP more attractive, pulling back again at this point. These are the top losers, out of the 11. But out of the 61 gainers, we are seeing that Africa Prudential, is among the one leading the chart now with 10% gain, followed by Jahis Bank, also 10% gain. We're looking at Miss Oil, which also 10% gain, and NCR also 10% gain. Nimet from Financial also 10%. These are the top 5 gainers, and I'll tell you, these are all 10% gain in the market for this morning. It's a good one at this hour. Then look at the do that in terms of volume. I will tell you, this volume that was saying in the FCM FBN holding, which is FBN holding, and which is FCM FBNH, FBN holding. We are seeing that volume continue, and price are also 10% up again this morning. But the volume here, compared to what we saw last week, about almost 5 billion share traded, we are seeing also in very improved, also above average traded volume in this in this component, 160.52 million share traded so far, followed by Sterling Bank. Sterling Bank is also around 458 kobo, which also looking up. As traded by 103.1 1 million shares traded for sterling. Then ICO Insurance is coming up 77 kobo and 88.29 million shares. You can see, and Universal Insurance investors should also be very careful on all this kind of stock. And we have seen about 84.103 million shares traded so far, and Transcorp is almost 4 naira 50 kobo, 4 naira 54 kobo, heading to 5 naira 79.87 million shares traded. These are the most active stock in terms of volume as we speak. You can see that financial sector, most of them are service sector that we're seeing here. The transport and the service sector in power. Also seeing financials like FBM Holdings, Sterling Bank, ICO. These are, investors should also think that what is happening in the service sector, this should be a clue, to guide you to know exactly what to do. Like then quickly we'll go to the chart as it will be displayed to see what is happening. Like I told you earlier that anytime you want to look at the chart, look at where the direction of the market, and when you start making a higher high or lower low, is the kind of stock that is a market that's a consolidating and a sideways movement. But now consider that the market is making what an uptrend is a markup market. I told you that we have four phases of market: the accumulation, the markup, the distribution, and the markdown or the decline, what you want to call it. But to speak now, market is experiencing a markup phase. You can see after pulling back here, we saw that I told you that day that market will call a pierce pattern. The next day that is a bullish pattern. You can see that it has continued an uptrend again. For me, it's a good one. You can see the market pull back. Say that as it pull back here, market will gather more strength. You can continue pull back on that more strength. These are the things we also have in mind, that you must know the direction of the market and also the momentum behind the market at any given time is very, very, very important. Let's quickly look at what is happening by looking at this is a daily chart. I want to look at 1 month chart here so that we can really get the clip of the market where we are. Fine. I want to give you position. Look at where we are now. Market is already at 64,000 636.82. This is the position of the market right now. The peak of the market, which is the highest market has touched in Nigeria since NSE or start trading stock, was 2008, when market in the month of March touched about 65,894. Now already at 64. That means you can see where the blue line is drawing. Now you can see that we have, like I said, this week in the weekend class, we expect to see the market breaking out, and you can see it already with the life of Dangote gaining also almost 10%. 10%. I see this thing keeping up, and we can see also volume has also improved in recent years. You can see it here that the volume we are seeing is away from all the volume we have seen so far. Something is happening. You can also see it here. For me, it's a good one, but don't be carried away with the market. And also, the scenario that brought the market up in 2008 are different from what we are seeing today. The liquidity level here was high as a result of what margin loan that was in place, and at the same time, that was time also have a financial meltdown from Liver Brother International. Then the financial crisis that also in 2008 for you can see the market also rally, which we have seen from here from the previous year 2020-24 after the Soludo bank capitalization. We saw all this liquidity push the market 2007 to almost the first quarter of 2008 before the market started coming down. It came as low as almost 19,000, 20,000 before the banding. You can see the trend here, correction, form, a strong support level here and here. And these are why also as a technicians or a trader, you must understand what your support level and resistance level. When you see market breaking out resistance level on a good volume, something is happening. You can see the market for the year, number from 207 to date. You can see where the market is now. And when the market breaks down, our market will be in all-time high, just like what we saw in Japan. Japan is doing 33 years high. Despite that, there's a little correction, pullback kind of a retreat. But I'll tell you, Japan is doing 33 years high. That means once we break out now, we can tell you that our market will be fine, and we'll see that policy statement and policy implementation and others will support the market, especially if our Q2 number we're looking at or half year, come beat expectation. That will be a kind of another momentum or another factor that will add more pressure or more force, and to want to call it, or more energy to the market to start looking up again. That means investors in the market should be very careful when to take profit, and also know when, because we saw the market was going up in 2008. Finally it is correct. Correction is part of the market. No market in the world remain in up direction. That is why you must have a goal that you are trading your plan, and that plan you trade, you must know your entry and your strategy and know when to take profit. These are things that are very key because even when the fundamentals give us direction of the market, the volatility, trend of market, but your technical analysis tell you when to buy, and at the same time, this technical analysis tell you when to buy, it's going to take action. If you fail to buy when they are giving sign, when the market turn, you probably won't complaining. Like I said, that our market is one way. You can see it here, one way movement, also one way down, one way movement. But ability for you to know when to take your profit, when to also come back to the market. You buy low, you sell high. Also, you can also be taking your profit slowly as the market is going up. As you're taking profit, you are buying other stuff that has strong fundamentals that you know help you to work to manage. Because I tell you, the education in the market today is different from what we saw 2008. I believe that that's why you are seeing that market is going up unstable, and also the kind of people that are driving the market now are real money, not just margin money. No. But I believe that also when the banks start coming back also to play this market, because the way the banks are going into holding companies, the possibility that banks also play the market is very, very high. Why? Because their subsidiary might be one of them will also be playing the market. That's why I said trading of the of instrument is a part of going to also impact the banks earnings and all those stuff. That's why I said the engine room of any economy is the banking sector. With all the policies and all happening around, I tell you, bank will benefit most, and that's why we are seeing that design investors are already keen in that, because numbers that will come from this sector, the financial sector and the service sector, are likely to look better to support prices to go higher. That's why you also must do what we call a sector rotation, and also take your defensive stocks, take growth stock, value stock, even the local stocks, the penny stock, know how to put them in your portfolio so that it will align for you to remain in profit, even when the market adjusts, so that when the market try to pull back, you are already put your portfolio as a proof to even a bear market, you know that your portfolio has stocks that can take you back to where the market is coming from. For me, there is no cost for alarm in the market, but don't be greedy and know exactly when to take what profit. Back to our live class, let's go to 1 hour chart to see what the index is saying. The index also telling us in the 1 hour chart here, you can see that there's a slowdown here after this uptick here. You can see this is a 1 hour chart. You can see that the slowdown here, waiting until there's another move. This 1 hour chart was looking at. Let's quickly look at 15-minute chart. It's very, very key for now. Check out our 15 minutes you can see that there are some activities even in the last minutes that people try to take profits on stocks, but the market is showing us. But recently now, the last 15 minutes market also kind of trace up again. But let's call other indices to to guide us more. But I tell you, you can trade your price action to filter noise and look at what your candlestick or what you call it to tell you exactly what is happening. Let's call all those indicators we use to see our. Let's start with the MACD, money flow, and what, and our T line. Our T line, any day, anytime. I know we're all used to it. Yeah, our T line can tell us now, even on the 15-minute chart, after the T line, the market is still above the T line, and we're seeing not a bad move, but after we're seeing a sign of slowdown instead of profit taking, but we're seeing a trace up. And also, what we also look at in 15-minute chart is that look at what the MACD is forming here. I see that we're seeing a kind of a divergence here, but I'm not surprised. That's the same thing we're seeing here. You can see that it's coming down, it's also coming down here, but money flow is also slowing down on a 15-minute chart. If we look at 5 minutes, then we'll now go back to look at the market. On 5-minute chart, you can see that market is still above the T line on 5 minutes, which is a good one for me. And if you look at this histogram here, coming down here, you can see that momentum is coming up gradually here, but until cross 4 will not say it's a bullish one. And money flow is down to almost below 50 for this on a 5-minute chart. But quickly look at what the 1 hour chart will indicate us. The 1 hour chart indicator tells us that the market is still very, very strong. You can see it here. Even when it's goes down here, you can see that the MACD is short momentum in the market is still very, very high. You can see that the price also above the T line, and this time between above the T line is still very high. Look at what it's saying here, where you are seeing the last form of T here, for the candlestick after the long one. For me, it's a good one, but that sign here is also a sign of profit taking for 1 hour chart. But we want to confirm for money flow is probably almost 99, 98 for me for entry mark. But finally, look at the day chart, because this is a day market we're looking at. On a day chart, we're seeing we're seeing a bullish divergence. Looking at the momentum and the index action. You can see here where it almost closed up again, and you can see that momentum the histogram has become bullish, as like it's also building up gradually up, and money flow now is almost hitting 90. Don't forget that it has, it has passed the 88 that's of to now 89. It's a good sign for me. It's a good sign that fund is entering the market. This is how to know that if there's fund in the market. I'll tell you there's fund in the market. That's why I call it money flow. Fund is entering the market. I can see reflecting on the price of stocks in the market. Let's quickly look at this data that to mention. Let's quickly look at what is happening. The life of let's see LBNH. Let's see LBNH. We need to see how long or how far will this stock go. And we want to chart now. You can see that I'll tell you, it has been trading above the T line. You can see that it's strong momentum. Look at how it's going, but look at now the distance between the T line and the price action of MBN is far. What does that tell you means? It's a sign. Let's quickly check for 15 minutes on this chart to tell us what's telling us on the stock. But still very sharp, but not still a sign of profit taking yet. Yeah, it's already a sign, sorry, because we're seeing that the histogram here is coming down. You can see it here on a 15-day chart, and you can see it. That means profit taking will be under with any moment from now, but also you have to apply wisdom if you are there, because I tell you this stock is moving on what? On momentum, not really on fundamental sentiment, and also reaction of holding structures and the insider dealing activities is what is pushing that stock. You need to also be very careful when you are such a position. It's very sweet to buy into kind of stock, but you must know why you are buying into it for yourself at this correct price. We can also look at the life of Fidelity at this point. Let's see what is happening. Fidelity Bank. Let's see what is happening there, so that you can also take advantage. See what is happening in Fidelity Bank. The momentum there, what I was saying, and this 15 minutes chart. I can see also, I'll tell you the sign of profit taking also in Fidelity already on the 15 minutes chart. Good sign. You can see it here, so that you also have to take caution. That as a profit taking is part of the market, but you must understand when to take the profit is very key. You can always see that the formation of the candlestick, the last for today. You can see it here that buyers and sellers are still struggling, but still momentum is still there. There's no divergence yet in the rate of momentum, still bullish, and money flow is looking up to get around 81 for the stock. For me, there's no cause for alarm for what know how to take profit in this stock. Because I told you that the banking sector are the one benefiting from this rally we're seeing. But don't be carried away because the banking sector are the one benefiting from it. You must also know exactly what you are doing in the market. The last one we're looking for today, look at what is happening in Chi PLC in Nigeria here. Let's see what is happening in Chi Hallmark Insurance. You can see this, so you can see when the stock pick up, you can see the momentum here still going on above the T line. While the momentum is still strong, money flow, yes, at 94 we're still flat, but let's look at 15 minutes chart to call it a day. What is telling us on 15 minutes chart? It seems that it's not looking bad too, but money flow are still looking down. Profit activities taken also is part of it, and that's why I said know when to take profit while by this market. Don't be carried away with up market. On this note, I will say thank you. I know when the market is bullish, everybody become analyst, everybody make money in the market. But when the chips is down, that people understand the market. But now, don't be carried away because everybody say go and buy stock that has fundamental, so that if the market pull back, you will be on a safer ground than buying all these local. Yes, they can give you 400 return, 1000 return, but most time when the market shake, these are the stock also that will turn to what sort of back of salt. You need to be very careful. On this note, I say enjoy the rest of the training. See you tomorrow, hopefully by God grace. Bye.